Welcome to the Temple of Technology. Brendan from Mercor. How you doing?
What's going
I'm
on?
I'm doing great. Thanks so much for having me, guys. I'm excited to be on the most profitable podcast.
There we
Yes.
go.
Well, you're live. Uh, can you introduce yourself, break down a little bit about your history, your story, and what you're building, what your company does?
Yeah, usually when somebody gets to your stage, they've been in market for 5, 6 years, so people have more of an opportunity to get to know you. So yeah, we'd love the full intro.
Yeah.
Yeah, absolutely. So I grew up in the Bay Area, met my co-founders, Adarsh and Surya, when we were 14 in high school. And so we were all in the speech and debate team together. They were the winningest speech and debate team of all time in high school debate, but I was always building companies in one form or another, so didn't want to go to college. And my parents insisted that I had to, and so I went to Georgetown for 2 years, where Surya was my roommate there, and Adarsh was at Harvard. And we started Mercor when we were 19 to train models that predict how well someone will perform on a job better than a human can. Similar to how a human would review a resume, conduct an interview, and decide who to hire. We automate all of those with LLMs. And then fast forward 2 years, we scaled from 1 to 100 million in revenue in 11 months. And so we're only 21 and running this really exciting company that's working with most of the most prominent companies in Silicon Valley.
It's more of a line than a curve over there. It's not really just a hockey stick.
How do you
It's a
so you're
fencing
you're very
sword.
you're very smiley right now. You look like you're having fun, but your LinkedIn profile is dead serious.
Okay.
You know, like I'm sure internally as a team you guys are focused on not letting the hype and the crazy initial traction get to your head. How do you think about running the team when the team has only experienced sort of massive, sort of immediate success?
Totally. And I think one thing that compounds this is that so much of our team is like college dropouts and new grads, right? Because it was the extension of our initial network at Harvard, Stanford, MIT, et cetera. And so a lot of them haven't seen what normal companies look like. This is all that they're used to. And it's easy to get caught up and lost in so much that's happening. But I think the most important thing to stay grounded is just focusing everyone on the numbers that matter long term, right? The network effects of the business. How do we build up the marketplace? How do we learn from all the performance reviews that we're getting to build our usage data flywheel rather than focusing on a lot of the lagging indicators like revenue or more of the customer signals?
Can you talk about some of the jobs that you're actually placing? Like, you go to Mercor, you get placed. Are you placing people in white collar jobs, blue collar jobs, everything? Any specific niches?
Yeah, so when we started out, it was that we were very amazed with the caliber of talent in India. And so we would hire these software engineers in India and use LLMs to assess them, hire them for our friends. But what we realized was that there was this really large shift happening in the human data market where large AI labs are hiring thousands of people to train the next generation of LLMs. And it used to be this crowdsourcing problem that was super low skilled, right? Of how do you get a bunch of people writing barely grammatically correct sentences for the early versions of ChatGPT that was moving towards this vetting problem of how do we find the most exceptional people in the world in high volumes that want to work directly with researchers to push the frontier of model capabilities. And so to your question, we now hire roles across almost all domains, or the vast majority of popular domains, ranging from software engineers to consultants, people in finance, medicine, law, et cetera, to
Podcasters.
both help more traditional customers as well as these AI labs.
Yeah. What about robotics? I mean, obviously there's this question of like a data wall in robotics. Google had that famous like arm farm where they were trying to generate reinforcement learning data with like 17 robotic arms just working on grasping. Are we going to see a future where people are getting placed into jobs kind of wearing motion tracking suits to generate robotics data? How do we solve that problem?
That's a phenomenal question. I'm not sure. I think so.
Okay.
Uh, there's a lot of questions around like what kind of data production are most efficient in robotics. And I will say we don't provide
Sure.
people to create robotics data as much yet, but it's certainly something that's top of mind as these companies start to mature and really scale up the kind of data that they're interested in.
What about
Um,
yeah, what about like revenue volatility? I feel like a lot of these, like if you're placing individuals into some big foundation model company or some big hyperscaler is doing a massive training run, they need to really nail down math, and they're going to bring in a ton of mathematicians, generate a ton of training data, and then they're like, hey, we're actually good, we're moving on to the next thing. That can kind of create a massive oscillation in your revenue. How are you thinking about like scaling out and making sure that the growth curve's smooth? Because obviously it's very
Yeah.
fast, but the iron law of the universe is like what goes up quickly comes down quickly, but then maybe there's a second act and you go back up again, and over time it looks smooth, but it can be very jostling in the next few years.
Yeah, I think the most important thing to think about is the leading indicators in fast-moving markets,
Mm-hmm.
right? And that if you look at the most sophisticated labs and what they're really investing in, it's this super high caliber expert data
Mm-hmm.
that is like far beyond the model frontier of capabilities. And so,
Mm-hmm.
so long as we focus on like the leading indicators, the things that, all the big tech budgets are starting to move towards, that positions us really well. And obviously, like the leading indicators evolve over time, and we need to position ourselves there. I think where companies get themselves into trouble in these fast changing markets is when they aren't looking at the leading indicators and they're sort of sitting with the large incumbents that are doing a lot of the legacy systems that get phased out. And so that's how I think about it. But my broader take on the human data market is that it's going to grow dramatically because so we're getting to the point where RL is so effective that you can create almost any eval and it will be able to solve that eval. And so the
Mm-hmm.
barrier to applying AI throughout the entire economy is just creating evals for everything,
Mm-hmm.
right? Which is a process that inherently requires humans in the loop. And so I'm very excited about building that world.
uh, what are some customers that you can talk about or maybe allude to that have been kind of surprising? We talked about yesterday Yum Brands, which is like a $44 billion public company that owns a bunch of fast casual restaurants. They're partnering with NVIDIA and like buying chips and like actually effectively building their own AI in house. Has there been any sort of, you're obviously working with all the big sort of foundation labs, or I would say most of them would be my guess, but has there been any customers that you're working with that you've been surprised by?
Not too surprising yet. Like most of our customer base, we work with all of the top 5 labs in the US, and we're starting to see maybe actually one interesting thing is we're starting to see a lot more customization at the application layer. And I think a big reason for this is that it's now much more data efficient to customize models with RL environments and a lot of this like new kind of data versus fine-tuning data that people would do historically. And so it's now becoming, this like gold rush for all these application layer companies without too much CapEx, they're able to get these incredible results. And so we're seeing some of that, but at least for the most part, the like legacy Fortune 500s haven't really caught on to this yet. And I imagine that that might take a year or two.
Well, that'll be a nice rush of revenue once they realize what's happening.
I have a question.
Yeah, go for it.
I mean, we've been talking a lot about agents and kind of wondering, obviously agents are breaking through in the enterprise and the coding sector, but we've just been kind of tracking against like, when can you actually use an agent to just book a flight reliably? And I'm wondering if we're in this weird thing where you see a foundation model company do a press release and it's like, we're working on, fundamental math innovation, or we're going to solve, I forget that like really, really hard problem in math. And it seems like maybe there's a gap in the human RL training loop just around like a really good executive assistant. Is that the gap? Is it, we need more data there to actually break through, or is that just a product issue? Like, why can't Siri reliably book me a flight?
Yeah, so I think there's two challenges. One is the interest of researchers has historically been in these like super hard reasoning
Yeah,
problems,
yeah.
right? They're interested in GPQA of how do we solve PhD level reasoning. They're interested in IMO level math of how do
Yep.
we have models that are beating all of these incredible mathematicians, and have historically just been less interested in like how do we automate a McKinsey consultant or an executive assistant. And I think that shift is starting to happen. And so that's like a big part of it. And that ties into the data that they create. Because, of course, if you want to automate a McKinsey consultant, you need evals for everything a McKinsey consultant does. If you want to automate an EA, you need evals for everything that an EA does. I think the other part of it is the models are just starting to get really good at tool use. Like tool use is still relatively immature relative to all of the reasoning capabilities. And so I think as that starts to happen, I would really expect that this year you're able to use Operator or
Yeah.
whatever the equivalent agent is to start booking flights and doing a lot of these more mundane tasks.
Have you ever been approached by any of the labs around help us make our models funny? Like, is there a
Yeah,
world?
a ton.
Is there a world where you guys are you show up to the Comedy Store here in LA and you're trying to grab some
I mean,
of the
that's my
comedians
current
and say,
eval.
hey,
Every time
come
I try
on,
a new
come on,
LLM, I'm
Workcore.
like, tell me a joke.
We're gonna test how funny you are.
Yeah.
We got some opportunities for you.
Yeah,
if you can
the Joe Rogan mothership, we just pull them right off stage. The Kill Tony bucket pulls. Hey, you got the joke book. Come on.
But it seems like that's like when every model's like pretty good at some of these sort of like foundational like problems and thinking, then the way to differentiate is can a model be more entertaining for consumers? And there's value in that itself.
Yeah, a lot of our customers at the frontier, as you've seen in recent releases, are starting to think a lot more about humor and these exciting things. We have been hiring a bunch of people out of like the Harvard Lampoon and equivalent places that have these comedic skills to help teach models how to get there. And so it's really like every capability you want, you need evals for.
John has been doing like the Coogan eval, which is just he asks various models to tell a joke, and then they end up just taking you on this winding thing that sounds like a joke, but it's not actually. It doesn't actually have a punchline.
I mean, it's hard because there's not a quantitative eval for humor. It's so subjective and so qualitative.
Another question just related just broadly to the future and how these labs, so the labs are your customers. The critique of the labs broadly and the model companies as they raise tens of billions of dollars has been, if the models are commoditizing and intelligence just becomes too cheap to meter, where does the value come from? John's point of view has been, there are many commodities in the world that have a ton of value, and there's a bunch of great businesses that drill and produce oil and then sell it, right? Even though oil is like a commodity that just sort of trades on the open market. How do you see the model market long term, and do you see a world where there's constantly new companies being spun up to create these sort of bespoke, specialized models for different use cases?
Yeah, I think the value will accrue to the product layer. Like I don't think about OpenAI as much as an API business, and it seems like most people are really placing a bet on the product side of things, which will start to get very exciting, especially and spread out across many companies, considering that customizing models is so much more affordable than it used to be. So that's sort of how I see it playing out. I think one of the things that a lot of investors don't quite realize when they're not like in the code of building these products is how low the switching costs are for API, right? Like it's a line of code to switch back and forth and like see how new models are doing. And so it's hard to build a business when that's the switching cost. And I think it's really going to be in the product layer.
Well, I mean, given that, do you have a view on why every single ex-OpenAI employee seems to start the exact same foundation model company instead of doing something else? I was really hoping for like a supplements company from Ilya, or like a hair loss or something fun, something different, t-shirt company. But everyone just seems to be, hey, I'm going to do what I know. I've been building foundation models. I'm going to stick with it.
Yeah, it's a good question. I think a lot of it ties to just like the ideology around AGI, right?
Sure.
This is the most important problem in the world. And so how do we all race as fast as possible to get there rather than a lot of the, unit economics and competitive dynamics that investors would be thinking about?
Yeah, so they're basically just disregarding the fact that the value might accrue to the application level or layer for 10 years, and then it's completely irrelevant once ASI arrives.
Yeah. I think
Yeah,
that's
it's an
a lot.
interesting strategy
sense.
if value in the short to medium term accrues to the product layer, but then if you actually can build artificial super intelligence, then none of it actually potentially matters in the end. So it's an interesting strategy. Last question for you. I know we have a minute left. This is the most champagne problem that founders ever have. And when you were fundraising, you probably couldn't even drink champagne. But do you have any funny stories? I'm sure you raised a series of like very competitive rounds. Do you have any funny stories of like offers investors made to just like try to get you? You know, the classic is like,
Didn't you go on a helicopter?
Like the classic is like
Benchmark was
you
a
have,
helicopter. We a private jet to Vegas to race Ferraris.
There you go.
There we go. I knew there was gonna be something.
Yeah.
You're like, I don't know. I never actually got my driver's license. They're like, it's fine. It's a private track.
Are those effective? Did they win you over? It sounds like you went with Benchmark after the helicopter thing, so maybe it's effective.
No, they could be very tempting because we never actually for our Series A and our Series B we didn't create a slide deck because we weren't both times like people asked for it and we were like just not really willing to create one. But the sales processes can be a lot of fun. It's sort of like Christmas where you're getting all of these like gifts and fun experiences, but also trying to balance that with it not being too much of a distraction from building the company.
Well, that's fantastic.
Love it.
Congrats to you. Good luck. And we'll have to check in soon when you have new fundraising news.
Absolutely.
Every other week.
Let's
get them on a schedule.
Yeah, same time next week for the Series F. Right?
Yeah.
Okay, cool.
We'll make it happen, John. There we go.
Fantastic.
All right. Give our best to the team. Thanks for coming on.
Bye.
Thanks. See you guys.
This is great.